shares of Walmart rose as much as 5% to an all-time high Tuesday morning after it raised its annual profit and sales forecast for the third consecutive time. Customers bought more groceries and other items in a sign that the world's largest retailer continues to gain market share ahead of the holidays. Profit topped estimates in the third quarter, and same-store sales in the U.S. grew faster than anticipated. CEO Doug McMillon said Walmart saw strong advances in store pickup from online orders and delivery from its stores, too. To broaden the appeal of its delivery service, Walmart slashed the annual fee for its Walmart Plus membership by 50% ahead of the holiday season. Though inflation has not made much headway in recent months, it is on a downward trend, raising purchasing power for American consumers. Walmart said it saw share gains across income levels, mainly led by upper-income households, which make more than $100,000 a year. It also expects the majority of its customers to maintain their holiday spending plans from last year. A Walmart spokesperson did express concern about the impact of tariffs that President-elect Donald Trump is proposing, which could lead to increased costs for customers at a time when they are still feeling some effect of inflation.
Seven & I's founding Ito family wants to raise billions to take it private by the end of this financial year. That's according to Japanese broadcaster NHK on Tuesday, which reported the family aims to take in more than $52 billion. The family has already established a special purpose company. It's in talks with Japan's three largest lenders and major US financial institutions to raise funds to take the 7-Eleven owner private. A spokesperson for 7 & I could not be reached for comment outside normal business hours in Tokyo. 7 & I has been under pressure to convince investors it can enhance value on its own. It's also subject to a $47 billion takeover bid from Canada's Alimentation Couche-Tard. 7 & I said last week it had received a buyout proposal from the founding Ito family. Going private would allow it to continue under current management and remove pressure from shareholders to sell off more of its assets. And it would end the threat from a bidder that it may see as hostile. A management buyout offer could also be a tactic to force Couche-Tard to bid more.
When Donald Trump returns to the White House, some of the more than 2 million U.S. federal employees worry their jobs may be at stake. The incoming president has tapped billionaire Elon Musk
Take over, Elon, just take over.
to help lead what he's called a new Department of Government Efficiency to cut costs and likely lay off federal workers.
They want to be able to walk into an agency and say, here's the new rules of the road. If you don't like it, you're fired.
Steve Lenkart is the executive director of the National Federation of Federal Employees, which represents more than 100,000 workers. He says Trump could revive a plan to convert some federal employees to Schedule F status, which strips them of job protections.
So the employees would be ripe for intimidation and threats, threatening to fire them or demote them or move them to another part of the country where they don't want to live and that kind of thing. The games you can play with a federal employee under Schedule F, under an unprotected status, are unlimited.
Federal employee unions are lining up lawyers and preparing public campaigns to try to stave off any mass firings. But they're also hoping congressional Republicans will join Democrats in defending their importance and protect the services they provide to Americans.
A lot of the employees are just nervous.
Lilas Sukup is with the American Federation of Government Employees.
So I don't think that everyone really fully understands the pieces of the puzzle that the federal employees actually affect in their day-to-day lives that could be affected by either changes, elimination, or reduction in services or policies and procedures on the regulatory side.
Trump also said former presidential candidate Vivek Ramaswamy would join Musk to lead his government efficiency panel. Ramaswamy recently proposed cutting 50% of the federal workforce by firing everyone whose Social Security number ends in an odd number. But Lenkart says it's still unclear how much power Ramaswamy and the world's richest man will have, because it's Congress that ultimately controls the purse strings.
A president isn't a king, or at least it's not supposed to be in this country, and that you're going to run against constitutional issues, you're going to run up against the law, you're going to run up against mandates of Congress. Congress is the only authority that's able to release money from the Treasury, and they have the right to oversee how that money is used by the executive branch.
British inflation jumped more than expected last month and rose back above the Bank of England's 2% target. Consumer prices rose by an annual 2.3% in October, very slightly higher than analyst projections. It was pushed up almost entirely by a rise in regulated domestic energy tariffs. That after a 1.7% increase in September, which was the first time the inflation rate fell below the central bank's target in 3 years. The increase took inflation to a 6-month high, and it represents the biggest month-to-month rise in the annual CPI rate since inflation peaked in October 2 years ago. Measures of underlying price growth gathered speed too. Official data showed services inflation rose to 5% in October, slightly up from September. Core inflation, which excludes energy, food, alcohol and tobacco, picked up very slightly to 3.3%. The new government of Prime Minister Keir Starmer has promised to speed up Britain's economic growth, but it was criticised by employers for the higher employment taxes they will have to pay from April next year. The Bank of England has said it could lead to higher prices as well as job losses. A Treasury official said the government was trying to reduce the impact of the higher cost of living, but knows there is more to do. Central Bank Governor Andrew Bailey on Tuesday said borrowing costs are likely to come down only gradually. He further said policymakers are waiting for clearer signs of how much inflation pressures remains in Britain's economy. Thyssenkrupp took a fresh $1 billion impairment on its struggling steel division. The firm blamed the sector's worsening outlook as weak demand and Asian competition hurt Germany's industry. The latest impairment on steel is the second in as many years for the German group. It drove Thyssenkrupp to an annual net loss of nearly $1.6 billion. Thyssenkrupp's troubles have forced it to find new owners for its iconic steel business as well as its warship division. Steelmaking is one of the most energy-intensive industries. The sector has battled high power costs and cheaper Asian rivals for years. It also faces billions of dollars in investment to cut emissions and produce steel through renewable sources. Thyssenkrupp is in talks with Czech billionaire Daniel Kretinsky over whether he could raise his stake in the steel division to 50%. It said discussions now depend on a new business plan for the unit, which is currently being drawn up. Despite its ongoing woes, the firm's shares jumped 10% Tuesday. Analysts said the write-down could ease the sale of a stake in the troubled steel business. They also welcomed an unexpected positive cash flow at the group level.
U.S. stocks finished mixed Tuesday, though technology stocks jumped as investors awaited results from Nvidia this week. Also, shares of Walmart added 3% after the company raised its sales and profit forecast for the third consecutive time. That wasn't enough to boost the Dow, which finished down nearly 0.3%, while the S&P 500 advanced 0.4%, and the tech-heavy Nasdaq gained 1%. Stocks began the session in the red after Russian President Vladimir Putin lowered the threshold for a nuclear strike in response to a broader range of conventional attacks earlier in the day, and Moscow said Ukraine had struck deep inside Russia with U.S.-made long-range missiles. Stocks paired losses as Russian Foreign Minister Sergei Lavrov said Moscow will do everything possible to prevent a nuclear war. Investors should prepare for more volatility, says Matt Rowe, head of portfolio management at Nomura Capital Management, as stocks have had quite a run and are now expensive.
It's now a guessing game of how far is too far as the rally goes. And there are a lot of other questions as far as risk assets go and where things are priced. And when I say risk assets, I mean equities, I mean corporate credit, the yield curve, pretty much anywhere you can invest money, valuations look pretty stretched. So, I expect that going into the end of the year that we are going to have a lot of choppy movement, a lot of up days and a lot of down days, and some pretty jittery reactions from the market because we are at pretty high valuation levels right now.
Other stocks on the move included Netflix, which gained about 3% after the streaming media company said 108 million people watched a boxing match between Jake Paul and Mike Tyson on its service. And shares of United Airlines increased more than 4% to a multi-year high after broker TD Cowen called the carrier its best idea for 2025 and raised its price target on the stock.